traders, Joe with you here. It is the 19th of July. We are at a midweek point, and it really hasn't been any different from the previous, as these markets are just super bullish. You know the drill. Let's get into it. So this surge has continued. I thought we were going to see a little bit of a hesitation or a corrective action on Friday or late last week, and we didn't. So I figured, okay, Monday is going to be the pullback. Quite the contrary. Putting our heads above resistance areas, showing a lot more extension, but there are ways we can take advantage of it, and we'll talk about those. So earnings season's kicked off. Strong moves in the bank sector. I like to see it's that first week, or I should say half week, that starts off. What do we get? It was Morgan Stanley, Schwab, and a couple, Bank, BAC, and then Bank of Mellon, PNC Financial. So you get these ones that come out first, and that usually, I kind of gauge what's going on with that. And they all did pretty good. Lockheed Martin came out as well. Didn't do so good. We actually have the chart. We're going to take a look at it because it wasn't our sideways sector. We might move it to the bear side here. So sentiment is absolutely just bullish. There's just no ifs, ands, or buts about it, and it's absolutely confident. Anything good is good. Anything bad is good. And where I came up with that was economic data from yesterday. Retail sales fell pretty aggressively, sneakily. Is that a word? Well, it is now. It was pretty sneaky. It fell pretty aggressively. Usually, and I understand it's a little bit behind. It's a month or so behind. Usually this is the season where retail sales would increase. But I imagine most of the spending from the consumer side is going to be into travel and services, things of that nature. So I can't wait to see that number later on next week. But retail sales did fall, and these markets, in my opinion, took it as bullish and has moved further higher. So that's kind of where we're at. We're at a very strong, optimistic, confident market. It's still light in volume, folks. This is the summer. So we'll see if things trade as we get deeper into earnings. But it's going to take something pretty massive to knock these things down.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
So let's get into our trade ideas here. This is from last week. I'm just carrying the lists forward. It's much easier to do because I like to spend the time to go through all the charts just in case a lot of us have taken these trades. So that's what we're going to do right now. Here's that list if you guys don't have it written down already. It's the same one from last week, so you're not going to miss anything. I'm going to go through them one by one here. So let's pause and jump out to the live markets and get started with Newmont. Now this is one that's been on and off our watch lists. I shouldn't say ours. Ours meaning most of the Maverick guys here, guys that have been doing the end of day posts, the weekends, and all that stuff, those trades, those updates, and for good reason. It just has this wonderful bullish pattern on it. And it looks like it's trying to gather energy to further itself. In this case, it's kind of consolidating up in this area. What I want to see with this is more of a bullish move back up towards this 46 level before I get bullish. However, we discuss this as a breakout above the 44. And for those vertical spreads and diagonal spreads and butterflies, you're doing very, very well. This is kind of the behavior you want to see. You want to see it turn around. So whatever you sold against, it can expire, creating a little bit more opportunity for it to gather some strength and move forward. It might even try to get back down to the 44 level. But it's in this kind of sideways choppy move, and it's funny because this is our first example of a trade today, and it's going to be the key to what's going on in the markets overall. We're in a zone which is very difficult to add positions. And what I mean by that is we want to be bullish. There's some great bulls out there, but with the extension in these markets, it's very difficult to add bulls. So let's flip-flop that. And well, I don't want to say flip-flop. Let's not go too far. Let's focus on the positions that we're in and work our management system. Meaning, are we close to a place where we can take our percentage of it off, or half a position, or are we close to targets? It's okay. This is where you got to start looking to unwind. Corey makes great mention of these things. When he sees a market extend itself, he doesn't necessarily abandon his bears or bulls, and look for bears or try to play. He's looking to take profits. So if we keep an idea of glass half full, like the markets are, but hey, if we've got a chance, let's lock in or take some profits. That way we can play overextending markets. If you're not in anything in an overextending market, then you just have to sit and wait. So it's a very difficult place to add new trades. There's my soapbox. Let's continue. Spent way too much time on one chart. This is RRC, another bull. I made mention of this even in yesterday's class where I showed it as a picture, end of day, and I still like it. It really is just giving me little bits of head fakes here at 30 though, isn't it? Did it yesterday. I don't think it's got the strength today so far with the size of the range of this candle, but 30 is definitely a level for it. I'm pretty confident, or comfortable, I should say, maybe throwing out some sort of a targeted diagonal on this. I haven't really dug deep into the options targeting area, or option strikes. 32 would be ideal. If not, maybe a 32.50. It is early yet, but understand if it's a diagonal spread or a butterfly, you are gaining from decay as well as the price action. I just want this to go a little further, and it's just holding on here. So be patient with this. It's a good one. Then there's a few that just took off. This is Costco. Great trade. Came to you. You guys brought it to me. I shared it with you. However you want to say it. Maverick's just doing really well. Good job, guys. You are Maverick. Maverick is us, right? But great breakout from Friday. And so we were talking about it here, I think, Wednesday of last week. Confirmed a bull pullback bouncing off of a rising 20-day moving average. Nice break to the upside on 14. And then Monday, Tuesday, Wednesday. So it is slowing. You can see momentum is easy to see in the candlestick's faces. So take a look at Friday's candle, very wide. Monday's wide, and then it starts to shrink and get even tinier. So the momentum is slowing, but the direction is still intact. Would you get caught in a pullback here in this little bit, or consolidation at very least? The answer is yes. That's what I'm expecting. That's why this is a difficult market to trade. I believe the rest of this week should be some sort of consolidation or corrective action, which is fine. I don't want to abandon any of my bulls. I could take a look at some of the bears positions we have and see if they're going to come back in, because a lot of these bears, you'll notice my list wasn't very long, did kind of, I should say, bounce out of their comfort areas, or for me, bounced out of their nice little bearish trends. They can go back into them relatively quick, so I'm not going to throw away all my bear lists. But Costco, just as an example, looks really good. A little bit overextended. If you guys got it, great work. If you want, wait for it to pull back, and you can look for it on your bull watch. This is OIH, another one. Beautiful breakout 2 weeks ago. Let me zoom in on this. And I am waiting for a pullback in this, and we didn't get it. So the expectations that I had was a little bit of a consolidation at 32. I'd like to see it pull back to 31. These markets are just not pulling back. So let's go ahead and explain to you, or if you guys who haven't been with me every single week, what my expectations were. Well, I was expecting a market correction. I really thought we were going to get that Monday, Tuesday, and even today, and we're not getting it. So we have a little bit more of an extension. That's fine. It means it just hasn't happened yet. I'm not going to force my trades on these markets. In fact, I just have to sit on my hands and wait for them to pull back to a place where I can jump back in. Let's take a look at PHM. This is Pulte. Now, a lot of these are pulling back right now, all of the home builders. XLRE, excuse me, folks. XLRE was on our watch list, and I still like it, and I still like all the home builders. Pulte's another one, really nice high base here, but they are starting to pull back where most of these other stocks aren't. That's fine because it had a head start. Home builders was actually way ahead of some of the other sectors because of that new home sales number. We do have another number coming out here. Actually, I'll read it to you. It shows a little bit more of a slowdown than what the new home sales. I was thinking it's a little bit of a late number, which they usually are. We're a month behind. I thought it was interesting that it was deeper into the spring. However, it looks like, once again, I think the retail, or I should say the consumer, has stopped buying stuff and start doing things. So I see the retail sales slowing. I think these will start to come off, but I think services are going to stay impactful. It's summertime, right? Let's take a look at lift. This was a crate chart. It got really ugly, but aggressive. And it's going to be difficult to trade because of that aggressive ugliness. So here we were talking about it, I believe, as it broke out. I want to say the 12th was a Wednesday. So we're right here. We wanted to see if it would pull back. And it did. It pulled back for, what, 2 days? No one could have caught this unless they were right on top of it. But we did have a pretty good inside day on Monday, from Friday to Monday here, and then just this follow-through going higher. Is lift still viable? Yes. It still looks good here. Let me shrink out and go a little bit wider. But I do like it as it broke above this gap that it had back in February. So it still looks pretty good. Playing a credit on this could be something nice, like above 12 or 11.5. It's really just hard to catch these things as they're shooting up. So buying a call today, I'm just going to tell you, by the end of the day, you might have paid too much for it if we doji out here or consolidate or pull back. But it's on a really good uptick. So keep it on your watch list if you're not already in it. If you're in it, great work. Let's just follow your rules. This is observe here. And it's more of a topping pattern, which I'm fine with. This one makes a little bit more sense and is an easier bull to trade with a diagonal spread or a calendar spread or even a butterfly or a vertical. It's nicely sitting here parked. I'm fine with it for somebody who wants to add a little bit more sideways bull. It's great right here. But you definitely do some sort of a diagonal, a staged, or it should say a tiered expiration cycle would make the most sense. So diagonal spread, calendar spread would be a little bit better. You can see that it would be very difficult to gauge, like let's say a 128, 130 vertical spread, because that could actually hit it and come back from it in a day or two. It's just too volatile for something that tight. That being said, hey, do you want to open it up? I would say probably no, just because of the behavior that I've seen over the last week and a half. Let's just stay between that 128 and 130 and see if you can't squeeze something out of it. One that actually could be traded today, PYPL. Oh, crap. It's just gone a little parabolic on us. Wonderful trade. Good job for you guys that brought it to us. Good job for you guys that are in it. And hopefully you're just staying boringly and stubbornly bullish. It's right back up to a range here. Boy, it got there eerily, didn't it? It's just chomp, chomp, chomp. I'm not stopping until I get to 170 or to 75, and here I am. So you do have areas that this could start to maybe manipulate if it wants to slow down. Boy, this surge here, and I know I'm not too zoomed in on it, folks, but just to show you how aggressive that surge was, the direction and the minds that has been made up for the whole surge in the markets late last week and into this week is just, it's almost like a program buy going on. We'll get to the charts here, or excuse me, the index charts here in a second. All right, one last one for the bulls, and then we'll bust through some neutral and bear. Not too big a list on either one of those. So this is Visa, and it's pulling back. Really good, nice little base, high and tied up in this area. Then it broke out, moved higher. This is the expectation that I had for the week. Unfortunately, I didn't get Visa. I never was filled on it. But I would be fine with it if I was still in it because it is pulling back. 240 would be a beautiful landing zone. Somewhere within this wick that it set yesterday. It was pretty scary to watch that candle. However, it calmed itself down and it's now slowly moving to that 240. It could make it all the way down to the 20. I'm hoping it stays strong for anybody that's in it. My ideal was going to be a 250 target area, 245, 250, 240 broken wing butterfly was what I was pricing out on it, and I got cheap and I didn't get it. I was too cheap. So that way, if it does move above that 25, I do have a leeway or luxury of it getting up to 250 without hurting me too badly on my profits. Looking at it now, I would be comfortable with more of a pivoting point at 240 and doing a 240, 245, 250 full butterfly. Reducing my cost, increasing my gains when it hits the 245, or a diagonal. It still has to turn, though. That's the big caveat. Let's get into some sideways stocks. Here's our first one. This is Vail, and it looks decent. It looks like it's coming right back down. We discussed this. Hey, we could hit this resistance at 14.5, and it sure did. It sure did. So it's looking pretty nice. I don't know if it's going to fall all the way back down to that 1325, or boy, even retracing to its moving averages would be comfortable if anybody's in this right now. But let's stick with that 13 and a half range for now. I could lower that. You can see there's a lower area here. I don't know if I'd go all the way down to the 1250, but somewhere 13 and a half, 14 and a half, play it exactly median where it's at if you wanted a butterfly. For you condor guys, you're probably already on this outside of maybe 13 and 14 and a half, or 13 and a half, 14 and a half respectively. So all good. It's still holding in there, and I'm going to keep it on the sideways watch. Google is one that I was expecting to move out. It looks like it wants to come back in, and it is just super volatile. Sideways is very difficult to play in big tech like this, in volatile stocks, let alone earnings. Something you might want to avoid, but boy, you'll see the next one we look at is 100% earnings, and it's so far staying within a range. So Google has something a little wider. I would go from previous to previous. Whenever I look or put importance on pivot points, it's always from current stock price backwards. My chart reading is from right to left always. And the reason being is because what happened here and here is significantly more important than anything back here. Or I should say relevant. How's that? All right. So opening it that wide would make sense. I love the price action coming off of that high, moving back towards this crossing, 50-20 day, which is a bearish crossover, right? The 20's kind of slipping through there. But you could pick these spots here, whatever this is, 113, I'm going to guess, I don't know. No, excuse me, 116 up to about 126, somewhere there. Or if you're a whole numbers person, you could just go 115 to 120, 130. Boy, that's wide. I don't know. All sorts of strike prices you can play with that. Give it a wide berth. It is volatile. And then here is Lockheed Martin. Had its earnings yesterday. Pretty tumultuous reaction to it. Looks like it might be drifting lower, but it's funny because it's still, well, it was when I was looking at it this morning, inside of that range. Ooh, it's right on it. It's right on the down part. So if anybody's still sideways in this with anywhere between these ranges or this line I was drawing, you're still good. If you have the bullish move to the upside, which is, it did confirm really pretty there on Monday, didn't it? But that's why we avoid earnings. So if you caught yourself long in this, ouch. If you caught yourself sideways in this, you're still hanging on. And why I say caught is because we probably didn't pay attention to earnings. Because that is tough. Because that is a beautiful, where my arrow is a beautiful confirmation of a breakout to the upside. But lo and behold, that's why we don't trade during earnings. Or try to be mindful of them or avoid them. All right, that's it for sideways. I've only got a couple of bears, and the reason being is because if you guys take a look at your bear lists, they all have these beautiful surges, Friday, Monday, Tuesday, and Wednesday. Beautiful moves to the upside. In fact, Micron wasn't participating in it until today. You can see the gap up today, but it is still respecting that 50-day moving average. So I still like Micron to the downside. It never did quite roll over and confirm when we took a look at it last week. We were talking about the confirmation of a rollover. I do like how beautiful it was at the bearish crossover. It's still good. It's just a little bit more oomph to it. And if it starts to float higher, so be it. My my entry point is going to be below this area here. Let's call it 63.50 just to be safe. 63.50. I want to see it roll over. I want to see these starts to come back, candles like this. You can see this will do this when it turns, and we haven't seen that yet. So be patient with Micron, keep it on the bear watch. And then the last one I got, it's not the last, but it was Alcoa, and this one kind of popped up as a sideways trade. I liked it sideways, and I still kind of do. You guys can see it's getting tight when you take a look at the zoomed out version, and when you zoom in, I kind of like it. The 50-day is holding it. So for me, I'm wanting to short this, but I can't get there unless I see it slide below that 50. And this is kind of this is what I was hoping for, I should say, or what I'm looking for when it comes to the sell-off. Sure, it's going to be to this low point here at about 32.5, right? That's my first target. But we could see, hey, this might be the breakdown of a symmetrical triangle pattern, so this could fall substantially deeper. All right, but hey, listen, we might want to bump that up to sideways, just because it's pinned on that 50 now, pretty good. All right, That's all I've got for our trades today. So we're going to jump into our market analysis real quick here, and then we're going to get to your questions and trades in a sec. So far, all bull across the board. Another 2% on the Qs, almost 3% on the Russells. Oil also participating, up 1.33%. That's got to put it above $76 a barrel, somewhere there, maybe low 77s. I'm not sure. I haven't checked it today. But it's an absolute progression by across the board. And these are what's neat about these charts. So let's just jump straight into them. That is just directional, purposeful. Now, I want to say lower volume, but, that's not horribly low. It's not summer volume. Well, I can't really tell. I'd have to zoom this back out. But this directional move and just the purchasing going on it's just, hey, we got money. It's no more. We don't want it on the sideline anymore. We're going to put it back to work. And it's cool because it's in all three of the markets. Here's the diamonds. This might have had a little bit more with maybe one or two earnings plays and some of the larger. This is just the Dow 30, right? So one or two larger companies can really move this, but it's pretty directional as of yesterday. Hesitation so far today. We'll see if that continues or rolls over or does whatnot. Here's the Qs. Same idea. Going up, straight up, marching straight forward. And we've seen this. We've seen this in the past. These extended moves. I'm trying to think. Now, here we go. We've seen these. The expectations. Look at this beautiful dark cloud cover. Oh, I expected this thing to come all the way back to here. Never did. Here's a little bit of a hiccup. I think that was back in the worried about inflation and that final CPI number and what the Fed's going to do. And it was behind us, and the markets have just not looked back. So super strong, super bullish. Let's get into some economic reports because they were super light. Now, here is what's interesting. And I was just blabbling about this earlier in class. Is our retail sales numbers, and it's across the board. It's the month over month. It's the core month over month. Either one, it doesn't matter. It's a substantial drop. This is an expectation of a 0.4, and these are both in line or supposed to be slightly higher, and that dropped quite a bit from expectation. So that's a big fall off in retail sales. Now, what's really good about that, the market should say, oh, look, the consumer's slowing down their spending. Inflation's going to even fall faster. Maybe the Fed won't raise interest rates, so you could spin it good that way. And I believe that's where the markets are going. You could see it as, oh, geez, the retailers, they're clamming up. They're slowing down. They're not buying anything. They're starting to save. They know the recession's coming, and it could be doom and gloom. The market sure as heck didn't see that. The other number that goes with this will be the services number, and I think that's next week. So if we get a services number that's showing contraction, then we have an issue. But if it's expanding, like I say, all we have is a consumer that's not consuming. They're now traveling and going out. And you should be, right? It's summertime. Housing starts. This was out today, and building permits. Both going south, which is showing a little bit of a slowdown. I'm not sure where that's coming from because we had such a big number on new home sales, but new home sales could have been purchases that weren't recorded until just recently. So we'll see if this continues to trend further. Both are great for inflation, maybe some costs of living standards coming down, affordable rents could get, come down, become more affordable, things of that nature. So is it good? I don't know. The market sure seems it is. We'll see. But the rest of the week, not much. This is why people go on vacation. The end of July, beginning of August is a great time just to sit these markets out. It's really a bit boring as long as there's not any sort of outlying news that comes out of nowhere. But we do have the existing home sales number. I imagine that is going to trend in the same direction as the other two we just saw from yesterday and today. Philly Fed Manufacturing Index and the unemployment claims. That's about it. And unless this number is really far off, I don't think we're going to see anything budge at all. It's just going to be a very, very boring summer week. All right, folks, let's pull the glass and find our market direction and what you guys are thinking about. So let's start with the weekly, as we do. 100% vote very quickly with the limited amount of people today's class. Let's go ahead and close and share. +1 for the week. Pretty much straight up. A little bit of +2, a little bit of 0. So a little variance up or down from +1. Excellent. Okay, let's do our monthly. There it is. Okay, 100% voted. Let's go ahead and close the poll and share it. And we are a little bit more bullish on the longer term. 44% plus 1, 56% plus 2. Very good. Thanks, guys. I appreciate you. So, okay. And then I will go share what I've got. I've just clammed up a little bit on the weekly outlook. I took a +3 down to about a +1 yesterday. And I'm looking for, just as we're overextended, you guys know where that is with my outlook. When I see a price action extend over moving averages, I start to bear up in the short term. But my monthly outlook has not deviated from that +2 mark. The majority of the firm here is +2, +3 on the monthly outlook. I'd say all of it is. And then on the weekly outlook, I'm the only one that's kind of retraced a little bit due to extension. However, remember, there's some of us out here that will take profits when we see these markets extend in some of our bullish positions. So I went to 0, playing it back. It does not mean I'm bearish by any means. Please, folks, understand that. I'm just not too keen to put on more bulls. So +1, 0 is kind of where I'm at. Thanks. Appreciate the input, and as always. So let's get into our weekly performance. This is what our chart breakdown looks like. Technology, communication services, financials up there. And I imagine that has a lot to do with some of the announcements that we've seen in some of the larger financials over the last few days. So it could have had a big push to the upside there. Consumer cyclical, and then healthcare. Consumer defensive, starting to slide. Real estate slowing down after a pretty good pop. Energy and utilities on the bottom. This is exactly the markets we've seen through 2000, or from the beginning of 2023. This is actually... Yes, you could switch healthcare and basic materials, but that's basically what we've been watching. Technology by way ahead, communication services, financials and consumer cyclical could swap, but more so than not, everything that's green has been green for a while. It's neat to see healthcare back up there as well. All right, so biggest gains and losers, technology, utilities. Let's take a look at the charts here. XLK looks just like the Qs. Don't know what else we can do with it. It looks a little overextended. Looks like today it might want to start to pull back, but if it does, 175 would be a good mark for that to slope down to and maybe hit. We could just see outperformance and these things just consolidate, which is difficult to trade, but we'll have to turn on the put on the aggressive bull hat again. Right now I'm just kind of sitting on my hands. XLU's got a symmetrical triangle pattern. We've seen this a few times. It did break out of it a little bit here on this range, this little pop there, but this slope up is holding in. So it's one of these things that is definitely bearish, or I should say weak, but it's almost not bearish. Here, let me draw something that shows a little less bearishness. And what I mean by that is just it's kind of hit this triple quad top, however you want to, or bottom, quad bottom, and then it's had this nice little ascending move. Look at the shadows come off the bottom here. So if anything, I would almost treat this like an ascending triangle pattern, even though this quite isn't exact as that. So I would look to something, hey, this could climb its way back up above that 67 and play it bullish. Till then, sideways? Sideways might be good. All right, folks.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top right, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and proprietary trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
So overall, all three majors are very overextended. We've been in these situations before, and more often than not, they do correct. We might have been a week early, I was thinking they would correct this week, They could correct next week or even later this week. So look for corrective action, but do not confuse it with bearishness. Do not jump into bears unless you've already got a bear watch list where things are breaking down. Lockheed Martin might be a new example of maybe a bearish breakdown because it also has bad news with it. So unless it's like you're top down or almost that little home run bearish, I don't want you throwing any sort of bear things, and please do not try to counter trend these markets. If this week told you anything, it will catch you. I was expecting an absolute rollover from Friday's close or Monday into Tuesday. So if I was bearish on Friday, I would be getting smeared right now. Earnings season is ramping up. Always check your potential trades. So far, the markets are just one direction, and that's up. And I put that here with the earnings because I've seen some earnings miss, but it hasn't had an impact on the larger markets. We'll see if that changes if we see some of these larger tech miss. Maybe that'll carry through. The other thing is economic numbers. These markets are kind of throwing them out. It's good news is good news, bad news is good news. So it's just up. Bullish and confident, stay out of their way unless you're on board. Unemployment claims, Philly Fed, existing home sales, and that's it for the week. So if you guys aren't here, which a lot of you aren't, I understand. It's summertime. Thanks for listening. Let's go out and take a look at the trades that we have listed on our chat box, and I'll read them to you. All right. Let's go home first and see what the markets are up to. Oh, a little bit of a rollover. Okay, maybe we just wanted to spill over after midweek. It happens. Okay, James, let's take a look at ConocoPhillips. I know ExxonMobil's been on our bear watch, and I had to move that. It's just not quite there. ConocoPhillips looks bullish. Best entry was this morning for me, but it runs. We'll probably offer other setups in the future. Okay, and it could. That's a great little pullback, very shallow, very quick, confirmed. You might want to look. The next setup, James, you might be looking for is just maybe an ascending breakout. I don't need to say a pattern, but maybe a breakout above this. That's kind of pushing it there, but you can see that it was definitely its last high right here. So maybe a push there, or let it see if it'll consolidate. If this pulls back again, you might have the argument of a diagonal spread somewhere between this 105 and the 110. Yes, that's 110. I drew a line through it. Sorry, folks. But you could play it through there, wait for it to set up. So let me definitely put that down on a bull watch list because we need to refresh our lists, folks. We've got a long list, lots of them, but I like to add. Thanks, James. He said there's another one he's looking at as well, and it is APA, another oil company or energy. Apache. Any comments on this? Was another I was watching. Not quite as strong today. No, very similar pattern though. Isn't that interesting? The exact same pattern. So just find support and resistance levels. It had that same surge. That whole week last week was just, let's just hit a mass buy on everything all at once. But it is holding in there. Establish a range. You could do it again here. Maybe let's call it 39 to 36. Something like that. I'll put them both down. You can watch them. I imagine these things are going to move almost in tandem on their charts over the next few weeks. Okay, maybe a slight gamble. All right, Brett, let's take a look at your slight gamble, F-U-B-O. Fubo TV, huh? Communications. I like some long, possibly even some leap calls. He's going longer term on this thing. Okay. I see. The gamble might be because of the price, the cost, the stock price. Yeah, I mean, it's up 8.3%, which is 24 cents. Yeah, it's calls would be a good idea on that if you could afford the shares of stock. Might also work too, but do very light shares. This is one where people, it's $3. I'm going to put in $30,000. Well, if this goes down 25 cents, you just lost 8% of your $30,000. So yes, it is kind of a gamble, but fun nonetheless. We'll take a look at it. Look, very similar pattern to the last two charts we looked at. Huge move to the last week, a little bit of a pullback, now kind of testing its resistance there. Well, okay. We'll keep an eye on all these. Maybe they all fall at once, right? Correct? Or fall or retrace at once, or they could continue to move. This is a lot of energy that it's got to just calmly rest before it goes. But something to look at. Thanks, Brett. PayPal. Let's go back to that. Talk about Cameron's got a position on it or thinking of. Well, you're looking to close this week. Yeah, okay. See, once again, looking to take profits. $70 calls at 200-day moving average, which I don't have it up here, but I imagine it's right around this area. So, yes, absolutely. $70 call. He's $4 in the money. It looks like it might be slowing up. It's at resistance. That's exactly right, Cameron. That's what you should be doing. You know what? Let me see if I can't just bolt this in here real quick. Starts with an S, right? Simple moving average. There it is. Okay. Whoop. Needs to refresh. There we go. Yeah. It's right at the 200-day there. Where is my... it's close enough to it. Let me zoom in. But yeah, that's probably where its resistance is. Right around any time this area would make sense. But yeah, taking profits when they come in. Thanks, Cameron. Makes sense. It's kind of what you're forced with. If you're like me, in any position that you're not in, it's not showing that you want to get into it, or it's not triggering. I didn't get into a couple positions due to I was just too cheap, which is fine. It's part of trading. All right, let's get this one out here. This looks good. Shorted shares because of how liquidity in the options. Not too much there. Bought it. 12.5 calls to cover. Oh. Okay. So short stock covered with a call. All right. Good. Nice. All right. So it's hedged out. Oh boy, I like this. I like it. Look at this thing. Just, I can make it look prettier by stretching it out. Here we go. But nice breakdown across all support levels here. It's bleeding forward. That looks great. Excellent. We put that on the bear watch. RNA, huh? I swear we've looked at this a few times, haven't we? Just hit refresh on that and get the chart back up. It looks like we've seen this before. It might have been a lot further. Yeah, there it was. Up in this area. Remember, it was super popular as of late last 2022. Okay, thanks. Got that down for a bear. Looking at EL. This has been on our lists for quite a while. Okay, very nice. Looks like it's rolling over here. Like it. Looks nice. Sideways, but target range or tighter, question mark, 180, 192, 195, 210. Let's take a look at that. It's nice and wide. 210, 195, correct? Yeah, that's it. I just had to double read it, thank you. Which would be right there. Yeah, right in between there and then 180. I'm fine with that. That's great. That's for a sideways trade. That's really nice. Looks like it's slipping a little bit yesterday. It might scare you. If you wanted to be a little bit more bullish, you could just let it see if it'll float down to that 180 level. However, I'm fine with sideways. I'm fine with sideways. Let me put it down to sideways with a bear, just in case somebody wants to take advantage of whatever this candle's doing here and see if we can't slip more, because it is definitely out of favor. But I do like how it's really just trying to pin itself on that 190 mark. So you're 190, 180, 200 would make sense. But if you wanted to get it a little tighter there, that's fine. So he went up to a 210. So you have got a slight bias on this to the bull side, don't you? Right? 195, 210, 180. Pretty close. I could go anywhere on that. Thanks for sharing. Cool chart. Let me go ahead and type in our lists for today. A little bit light, that's fine. Good to see you guys out. It seems like the rest of you are on vacation, if that's true. Good. I'm glad. There we go. And I did like Estee Lauder to the downside as well. So if you guys wanted to play it, a little bit of a slip. But hey, I'm fine with the bouncing around. It hasn't really fallen apart yet. So if you're still in it there, it's still holding in pretty decent. So here's our list. Thank you guys so much for your input, and I hope you're having a great summer. And if you haven't gone on a trip, do me a favor, go on a trip. All right, folks, thanks for everything, and we'll talk to you next time. Bye, everybody.